of the super changes that will be introduced from the 1st of July 2017 is the introduction of a $1.6 million limit on the amount of superannuation savings that can be held in a pension account. Now, you may have heard this referred to as a $1.6 million transfer balance cap. If your current pension balance is more than $1.6 million, you will be required to restructure your superannuation income stream prior to the 1st of July. For example, if your pension has a balance of, say, $2 million, you need to restructure your affairs so that only the $1.6 million remains in the pension account where the investment earnings will be tax-free. So you then have two choices: either withdraw the remaining $400,000 from your pension as a lump sum, if you're eligible, or transfer the $400,000 back to an accumulation account where all investment income going forward will be taxed at 15% and capital gains at 10%. Now, when the changes were first announced, some people thought it would mean they would need to sell the holdings in their pension account prior to June 30 while they were still in the tax-free environment. However, the government are now providing capital gains tax relief, which means rather than selling and buying back investments, investors can now avoid unnecessary transactions and brokerage costs. Now, the purpose of the capital gains tax relief is to reset the cost base of an investment so the member isn't taxed on any capital gains achieved to date. Now, to do this, trustees can decide to reset the cost base for an investment to whatever the current value will be as at 30 June 2017. And so the next question to ask yourself is, which assets do you want to apply the relief to? It's important to note that the CGT relief isn't automatic. It doesn't get automatically applied to all the investments being transferred back to accumulation. The CGT relief needs to be applied on an asset-by-asset basis. Now, this is important because it makes sense to reset the cost base if the value of the asset has risen, but if it's lower than the market price as at 30 June, you would lose the benefit of the unrealised capital losses. It's also important to note that capital gains tax relief is only available if the asset was owned by the fund on November 9, 2016, which was the date the changes were introduced to Parliament. Assets purchased after this date do not qualify for CGT relief. So how do you actually reset the cost base? Well, basically you'll need to work with your SMSF tax agent to determine which parcels you want to nominate prior to lodging the SMSF tax return for the 2017 financial year. Now, as you can see, it's a slightly complex area, but anybody impacted will need to take action when finalising the 2017 financial statements. I'm Olivia Long, Chief Executive Officer, Super Guardian.